Hello. Thank you very much and for joining us once again and welcome back. We are discussing today small businesses tax relief. We all know this that in the last week of the last month, a guidance has been issued by the Federal Tax Authority on the small businesses tax relief. We'll discuss the guidance in detail. As such, there are no major differences, by the way, what has been given in the law, what was given in the related management decision. Everything is almost same, but they have given a more clarification on a lot of things. And this clarification will be helpful for the small businesses to implement the related guide properly and smoothly. So let's start the discussion. As usual, first of all, we are discussing whatever we have discussed till now. We have discussed a lot of things in the last 25 webinars. And our last webinar was on the transfer pricing and its importance. We had discussed transfer pricing. We had started to discuss transfer pricing. We were planning to discuss the transfer pricing in detail, but in between this guidance has come. So we have decided to go ahead and complete this guidance first, then later on, after discussing the guidance, we'll go back to the transfer pricing. So in the small business relief guidance, I have classified this into three different sections. First section is the scope, and we will see what are the businesses which are taxable persons, natural persons, resident taxable persons, or non-resident taxable persons, that they can opt for small business relief or they cannot opt for small business relief. We'll discuss which businesses are coming in the scope of this small business relief. Then after this, if they are opting for the small business relief, what will be the compliance requirement for this? We'll look into this section as well. The businesses, the taxable persons which are opting for the small business relief, what is the compliance requirement for them? At the end, we'll look into certain examples as well, which has been given in the guide. We'll discuss all those examples in detail. As usual, if you have any question, you can ask at the end of the webinar. So the scope. So I just wanted to know I just wanted to discuss what is the reasons of introducing these special provisions in the law for the small businesses. The reason is the general principle that 80% of the usually government revenue is coming from the 20% of the businesses. And 80% of the businesses are only contributing 20% of the revenue. Usually the small businesses are not contributing too much in the tax revenue. So a government across the globe, they are giving certain privilege, certain freedom, certain options for the small businesses. If they wanted to opt, they can opt for the small business relief for the time being. Here in the UE law as well, the government has given a relief to the small businesses up to 31st December 2026. Might be they will continue with the same provisions of the law, or might be there will be some sort of changes in the future. But initially, this privilege, this freedom is available for the small businesses up to 31st December 2026. Government, as I mentioned, government has already introduced one guide with the name CTG, Corporate Tax Guide. SBR stand for Small Business Relief 1. The relief is only available to the resident taxable persons. We all know this, that the small business relief is only available to the resident taxable person. These resident taxable persons can be juridical persons, or it can be natural persons as well. As required by Article 21 of the law, if the gross income of the resident taxable person does not exceed the threshold, what is the threshold? It has been given in the related ministerial decision. Initially, in the law that they have given, that if the resident taxable person gross income is not going more than the threshold, then they can opt for the small business relief. Then later on, Ministerial decision has been issued, and in that decision it has been mentioned that the threshold is 3 million in the relevant tax period. So if the taxable income, if the gross revenue of the taxable person, resident taxable person, is not going more than 3 million, they can opt for small business relief. We all know this, what are the resident persons and what are the non-resident persons. Resident persons, we have already discussed in detail. These are resident persons, these are the non-resident persons. As I discussed, this relief is only available to the resident taxable persons. So this is not applicable for the non-resident. This is not applicable for non-resident person. So this relief is only available to the resident taxable persons, and we know this resident taxable person can be a person which is in juridical person which is incorporated in the state, a juridical person which is incorporated out of the state but this is controlled and managed from the UAE, and it can be include a natural person who is doing the business within the UAE. So our further discussion will be small business relief is available only to the resident person. This is a comprehensive guide. What are the resident persons which can avail the small business relief? So I have started this discussion from the taxable person. These taxable person can be a resident taxable person. It can be non-resident taxable person as well. Resident person can be juridical person. It can be natural person. And the juridical person, if the gross revenue is up to 3 million in the current tax period or in any previous tax period, they have not crossed the limit of more than 3 million. So current tax period is maximum up to 3 million. In any previous tax period, the revenue was not more than 3 million. If this is the situation, they can opt for small business relief. If in any tax period, any previous tax period, if they have crossed the revenue threshold of more than 3 million, then they cannot opt for small business relief. Second is the natural person. We know there are 3 different categories in the natural person. Natural person having a taxable income of up to 1 million, in between 1 million and 3 million, and more than 3 million. Up to 1 million, we all know this, that they are not liable to register. They are not liable to register. They are not liable to corporate tax. They are not liable to pay any tax to the government if the natural person having a business income up to 1 million. If the natural person having a business income up to 1 million and 3 million, and then in any previous tax period, the revenue was not more than 3 million, yes, they can opt for small business relief. If in any tax period, in the previous tax period, they have crossed the threshold of more than 3 million, in the current tax period, they have revenue of up to 3 million, they cannot even opt for the small business relief. And if the natural person has revenue more than 3 million, they cannot opt for the small business relief. Now, this is a natural person, non-resident person. I discussed in the very beginning, this is only available to the resident taxable person. One exception has been given in the guide. In the guide, they have mentioned that if this is the PE of the non-resident person, we all know this, that the PE of the non-resident person is the non-resident for UAE corporate tax. But they have given exception that the PE of the non-resident person, if there is a double tax treaty in between the 2 countries, and there is a provision in the double tax treaty, there is a no discrimination for the PE of the non-resident company as per the OECD guidelines or as per the UN model. These are the 2 different models, by the way, for transfer pricing. So PE will be treated like a juridical person. There is a one possibility, one exception is there. The PE of the non-resident person can fall under the definition of a juridical person, and they can opt for the small business relief if they are satisfying rest of the all conditions. There are 2 major conditions for the PE of the non-resident person to be qualified as a juridical person, that they can opt for the small business relief. These 2 conditions are, there should be a double tax treaty in between the 2 countries. First. Second thing is, in the treaty, there is a one clause as per the OECD or UN model, which states that there is no discrimination for the PE. If this is the condition, then If this is the condition, then the P of the non-resident person, upon satisfying the related condition, they can opt for the small business relief as well. Otherwise, they cannot opt. In general, we can say resident juridical persons having a taxable income of up to 3 million in the current tax period, and in any tax period, they can opt for the small business relief, or natural person having a taxable income in between 1 million to 3 million or maximum 3 million in the current tax period and in any previous tax periods, they can opt for the small business relief as well. Important thing is, while calculating this income of a natural person of this 1 million or 1 to 3 million or more than 3 million, we will never ever consider three different incomes. We will never ever consider the salaries of the natural person. We will not consider the income from any investment from a natural person, income in the personal income, income from the personal investment in the real estate. These three income we will never ever consider for the natural person to assess their income and to compare it with the respective threshold. Hopefully everybody is clear regarding this. This small business relief can be applicable on the tax groups as well. The tax group, we will not, if there's a tax group, the multiple entities on the tax group, then we need to consolidate, we need to look into the gross revenue of the tax group, and we need to apply the criteria. This tax group will be considered a one taxable person for corporate tax law, and this criteria will be applicable on overall basis on the tax group. How to determine the gross income? Again, this is very important. There are some clarification the FTA has given, which is very important. At least it was very important for me. We all know this. First of all, they said any exempt income will be considered in the gross income. Like we know, there are 5 different categories of exempt income for every taxable person. These are the dividend that is being received from the local juridical persons, or might be that they are getting any income from the participative interest from the foreign person, gain, losses of all these things. These are the exempt income. They said, no, this exempt income will be considered as a part of the gross income to consider the threshold. Taxable income will be there as well. So further, they said the juridical persons are the natural person which they are resident. Their worldwide income will be considered as a part of the gross revenue from all sources, business and business activity. Whatever the business activity they are considering, their all income will be considered as a part of the to ascertain this 3 million threshold. Then a very important thing, they said income from the sale of the assets, legally, or as per the IFRS, usually whatever IFRS allows us. This income on the sale of the asset, if the asset was assumed 1,000 sale proceeds, these sale proceeds we are not treating as an income, but they said sale proceeds from the sale of the assets, it will be considered part of the gross revenue as well. So if you have a land, building, any other asset, and you are selling that asset, whatever the receipts from that asset, it will be considered part of the gross income. So basically, exempt income, taxable income, any business income from the business or business activity, or any sale proceed from the sale of the asset, all together it will be considered, and we need to apply the criteria. Either this is going beyond threshold or below threshold. If beyond threshold, they cannot opt for small business. Below threshold, they can go, but subject to the condition that they have not crossed the threshold in any previous tax period. Revenue earned inclusive of VAT. We all know this, that the revenue VAT is 105,105. Or the second possibility is bottom line is VAT inclusive 100, 4.76, and difference is 95.26. So either 100 VAT inclusive value or VAT plus 5%, whatever the output tax, this output tax shall not be considered as a part of the gross revenue, because this is a government responsibility, government obligation towards the business. The business needs to submit this amount to the government. This is not business income. This is an obligation. This is the current liability. This is the current liability of the business, and business needs to submit this amount output tax to the government. So it will not be considered as a part of the gross revenue. the person not subject to say there are some exceptions. These are the exceptions. These people will not be able to opt for the small business relief. So two categories we have discussed, three categories basically: resident persons having a business income in the current tax period and in any previous tax period less than 3 million, natural persons having a business income in the current tax period in any previous tax period less than 3 million. Then PE of the non-resident person, if there is a treaty existing between two countries and there is a one clause that says there is no discrimination for the PE of the non-resident person, the three options are there, but there are some exceptions. First exception is qualified free zone person. We all know there are 6 conditions for the qualifying free zone person. Qualifying free zone person cannot opt for the small business relief. We'll discuss those conditions as well. Non-resident person cannot generally, but one exception is there that we have already discussed. Artificial segregation. If there is a one business, the person has artificially segregated the business, brought the income less than 3 million and opted for the small business relief, law says no, you can't go for it. Tax authorities will assess their commercial substance. They will look into this if there is a genuine need, separate business, the multiple things they can consider to assess this, there is artificial segregation or not. If this is artificial fragmentation, they will consolidate the number and then they will not allow you to go for a small business relief. But if there is a genuine need, commercial sense is there, businesses are separate, resources are separated, offices are separated, negotiation is separate, customer base is separate, then there is a possibility then you can go for a separate business. In case this is a separate business, then you can go for a small business relief. Otherwise, artificial fragmentation, separation, they will never ever be able to opt for a small business relief. If any company which is a part of the multinational enterprise, they will not be able to opt, they cannot be opt for the small business relief. So what is the M&E group? They said having a revenue of more than 3.1 billion globally. And second thing they said they are liable to go for country by country reporting as required by the UAE respective law. So these are the exceptions that qualified free zone person cannot become a part of the, cannot opt for SBR, non-resident person except one cannot opt. Artificial fragmentation, they cannot go for it as well. And an entity which is a part of the M&E group, this entity cannot opt for a small business relief. These are the 6 conditions that we were just discussing for the qualified free zone person. These conditions are the person maintain adequate substance in the UAE. We have already discussed the adequate substance in the UAE, derive qualifying income, has not elected to be subject to corporate tax, complies with the arm's length principle and transfer pricing documentation, satisfy the de minimis test and have the audited financial statements. These are the 6 conditions. If these 6 conditions are being fulfilled, we can say the person is a qualified free zone person. And qualified free zone person, if the person is a qualified free zone person, the person cannot opt for the small business relief. These are the members of M&E group. M&E group, we have discussed the group revenue. The entity is operating in more than one jurisdiction, and the group revenue is more than 3.15 billion dirham. And the country, the entity, the local entity is liable for CBCR reporting, country by country reporting. So these are the options that the entity can be a part of the M&E group. First, the separate business unit of the M&E that is being consolidated with the parent, the numbers are being consolidated with the parent entity. Second, the business that is not being consolidated just based upon this size and materiality, but legally they were supposed to do this, but they are not doing this because size is too low. That entity cannot opt for the small business leave. And third category is PE of the separate business unit of the M&E. If the business unit prepares separate financial statement of the PE. So these are the areas where the entities cannot go and opt for the small business relief. M&E having a revenue of more than 3 million. This is the same thing that we discussed as well. Any PE of the non-resident person, they cannot opt for it, but one exception is there. I have already discussed in detail. So we know small business relief, which businesses can opt for the small business relief and which businesses cannot opt for the small business relief. What are the exceptions there? I think everybody is clear regarding this. So what is the compliance requirement for the small business relief? Might be a lot of businesses are thinking, a lot of people are thinking they are not liable to do anything. No, this is not the case. Might be you are thinking that they are not liable to register. No, this is not the case. Might be you are thinking that they are not liable to submit the return. No, this is not the case. They need to register. They need to submit the simplified tax return. Principally, they are subject to tax. Very honestly, it has been written in the guide as well. But it will be assumed they don't have any taxable income in the respective tax period. So what is the, first of all, they said if the business is opting for the small business relief, any tax loss, tax relief, exempt income, deduction, interest limitation rule, transfer pricing documentation will not be applicable on such taxable person. But the person will be liable to register for corporate tax. They will be liable to submit the return, simplified tax return, and they will be liable to follow the transfer pricing arm length principle. Documentation is not required, but transfer pricing arm length principle pricing strategy is compulsory even for the businesses that are opting for the small business relief. So no taxable income, as I mentioned, they are subject to tax, but it will be assumed that they don't have any taxable income. Once they don't have any taxable income, means they don't have any taxable profits. So they are the businesses that are opting for the small business relief. Those businesses are not liable to calculate the taxable profit. They are not liable to make any adjustment in their revenue or in their accounting profits. Just we need to look into the top sheet. Suppose the revenue is whatever the X amount of revenue, these are the expenses, these are the tax accounting income. Usually we are adjusting this accounting income, arriving at the taxable income. This is the all sort of adjustment. The businesses that are opting for the small business, their business are not liable to do all these things. They are not liable to even consider the expenses. They need to look into the top line. This is accounting income. They need to map this accounting income into the gross revenue. This gross revenue we have already discussed. This gross revenue includes exempt income, taxable income, any income globally from the business and business activity, and fourth thing that we discussed, any income from the sale proceed. This is the gross revenue. This gross revenue they need to consider. They need to assess they can opt for the small business relief or not. Participation interest is an important thing. As we discussed, if the taxable person is getting any income in the form of dividend from any other resident person, this dividend will be exempt. If they are getting any income from the participation interest out of the UE, there are some certain conditions. If those conditions are being fulfilled, then specifically they said the income from the participation interest, capital gain, forex gain or loss, impairment gain, these all are exempt as well. So the resident person that is opting for the small business relief, any income from the participation interest will be included to calculate the gross income that we have already discussed. Business that is opting, taxable person, resident person that is opting for the small business relief, if that taxable person is giving dividend to any other person, still that dividend will be considered as an exempt income in the hand of the recipient. Why? As we discussed earlier, business itself is subject to tax, but they don't have any taxable income because they have opted for the small business relief. Since the business itself is taxable, and business itself is subject to tax, resident person itself is subject to tax. So whatever is the income of the resident person, that income will be considered as an exempt income, which is being given in the form of dividend to any other person who has participative interest in the business that are opted for the small business relief. I believe everybody is clear on this. What they need to do, what they not need to do. This is a chart which has been given in the guide. If election for small business relief, No election for the small business. First, required for register. Yes, they are liable to register as we discussed. Then required to file a tax return, full, no full tax return. They are required to submit simplified tax return. Required to calculate a taxable income. No, they are not liable to calculate any taxable income. As we discussed, they are not liable to calculate any taxable income. Sorry guys, I'm getting flu. Apologies for this. So they are not liable to calculate any taxable income. We are just what is the reason behind it, because they are not liable to pay any tax. So no need to go into this hurdle. This is a straightforward burden on the businesses to calculate their taxable income. No, they are not liable to do this. No corporate tax to pay. Yes, they will not be liable to pay any corporate tax up to 31st December 2026. Subject to meeting necessary conditions. Can accrue and utilize tax losses? No, we'll discuss this in our next slide. Can accrue and utilize excess interest? No, they can't do this. Carry forward tax loss and excess interest? No. Carry forward tax losses and excess interest expenditure from the previous period. Yes, previous period they can carry forward. We'll discuss in our coming slide. Can apply relief for transfer within qualifying? They cannot apply this relief. Must apply for transfer pricing documentation requirement? No. Transfer documentation is not required, but they need to apply the arm's length principle whenever they are buying, whenever they are selling anything. Must transfer pricing principle? Yes, they need to do this. Tax loss and interest. This is very interesting. I will just simply explain it. This is a company. This company has not opted for small business relief. This company has opted. This company has opted. This company has not opted. Okay, this company has not opted. This company has not opted. Or you can say this is the same company in multiple years. This is the first year. This is the second year. This is the third year. This is fourth year. In the first year, they have not opted for small business relief. Second year, they are opted for small business. Third year, they have opted. Fourth year, they have not opted. So what the loss is? Loss is, and we know this, the losses can be carried forward. We know this, the interest can be carried forward up to 10-year losses can be carried forward for unlimited period of time. So this is a loss. So question is, this loss can be adjusted with the taxable income of the period in which the person has opted for small business relief. Loss is no. Then next year again loss, because the person has opted, they cannot avail. Then here they can opt. They said no, because this loss, because since they have not opted for the small business relief, they cannot adjust the loss of the period in which the person has opted for the small business relief. Even the person not in the fourth year, they have not applied, they have not opted for the small business relief. They cannot adjust any loss of year 3 and any loss of year 2, but they can adjust the loss of year 1. That's why they said, if the person is opting for the small business leave, they can carry forward the previous period losses. They can carry forward the previous period interest. Previous period interest they can carry forward. Means in the fourth year, first year losses, first year interest can be adjusted. In the fourth year, second year loss and second year interest cannot be adjusted. In the second year and third year, whatever is the loss of first year, whatever is the interest of first year, it cannot be adjusted in the second year and third year. Second year and third year loss and interest cannot be adjusted in the fourth year. And first year loss and interest can be adjusted against the fourth year, because in both of the tax period, the person has not opted for the small business relief. In simple words, you can say, if there's any connectivity with the small business relief here, then you need to look into the rules very carefully. During the period, loss or interest cannot be carried forward, previous period cannot be adjusted if the person is opting for the small business relief. And if the person is not opting for the small business relief, then any loss, any interest of the period in which the person has opted for the small business relief cannot be adjusted. Any period for which the person has not opted for the small business relief can be adjusted. I think everybody is clear on this as well. Optional relief. This SBR, small business relief, is optional and you can avail it at the time of submission of return every year, because we know that this is the annual return. At the time of submission of the return, if you are fulfilling the criteria, you can opt for the small business relief and you can submit the simplified tax return, and you can do this as we discussed earlier up to 31st December 2026. Election, this is optional as we discussed. A record, you need to maintain the record for at least for a period of 7 years from the end of the relevant tax period, and this record can be bank statement, sales ledger, invoices, all these things. Transfer pricing documentation is not required as we discussed earlier, but you need to follow the transfer pricing principles. Now we need to the level examples very quickly. This is a business 1, business 2, business 3. Current tax revenue, gross revenue is less than 3 million. Yes. Cost, whatever, this is, they can opt for the small business relief. Yes, they are eligible for the small business relief. Yes. Do they need to pay any tax? No, they are not liable to pay any tax. Their tax is up to this, but they are not liable to pay. They are not even liable to calculate the tax. Second illustration, resident person, Mr. X operated a business in Abu Dhabi. He is a resident person for the corporate tax purposes. He started his business 1st Jan 2025 and his tax period ends on 31st December. In most recent period, 25 derived revenue. Previous period revenue is less than 2 million. X is eligible because current period is less than 3 million. Current period revenue is resident person for corporate tax purposes and tax period is recent the income. Income is 2 million for the current period. Yes, they can opt subject to the condition. In any previous tax period, they have taxable income or gross income of less than 3 million. Mr. X is eligible to benefit small business relief. He is a natural person with the business activity up to 1 million. Up to 1 million, I would discuss natural person up to 1 million, straightforward, not liable to pay corporate tax. Less than 3 million. And less than 3 million, yes, they can go for it. Mr. X has not breached the revenue threshold for the previous period. Previous period they have not crossed. Current period they have not crossed. Yes, they can benefit from the small business relief. Another company, A Limited is the US incorporated company that is the office in Dubai, from which it assists a UAE-based client. PE, A Limited, office in Dubai, non-resident, office in Dubai. This is the PE. PE of the non-resident person is a non-resident for UAE corporate tax law. One exception is there, we have already discussed. Otherwise, they cannot opt for the small business relief, even their revenue is below threshold in current period and in any previous tax period. They have said it is not eligible for small business relief. It is a non-resident person, regardless of the revenue. One exception is there that we already discussed. Mr. Y operates a business in Sharjah. Miss Y operates a business in Sharjah. She is a resident person for corporate tax purposes. Her tax period ends on 31st December each year. Okay. In the most recent tax period, 31st December 2026, Miss Y derived revenue of 1.9 million. Okay. Current tax period revenue is 1.9 million. Previous period is 4.3. They have already breached the threshold in any previous tax period, so she cannot opt and the small business relief because the previous period tax revenue would have been less than 3 million or maximum 3 million. One more example is there. Mr. X is a resident person. In the tax period ending 31st December, his revenue was 2.5 million. Mr. X did not select for small business relief, had a tax loss of 4 million to carry forward. If they have not opted for the small business, whatever the tax loss they are carry forward, they can adjust it. In the tax period ending 2025, Mr. X revenue 1.7 million. Okay, previous period 2.5 million. Next period 1.7 means they are within the threshold. Mr. X for small business for the tax period. Okay. Carry forward losses cannot be used in the tax period. Okay. This carry forward losses can be adjusted for the first year if there are, but second year cannot adjust it because if they have opted for the small business relief. Because they say Mr. X elect for small business relief. If they are electing for small business relief, previous period tax losses cannot be adjusted. This is an example, okay, company A, company B, and company C. This is the year 2024, 25, 26. Tax loss is 10,000, tax loss is 10,000, tax loss is 10,000. This example is specifically related to the adjustment of loss. Meet the threshold? Yes, they are meeting the threshold. They are not meeting the threshold. Here we are assuming. Then elect for small business relief. Yes, they are electing. They are not electing. They are not electing. Now, the time they are electing for small business relief, any previous period loss for the year 2020, they cannot adjust. They cannot adjust. If they're not opting for the small business relief, then carry forward loss for the year 25 utilizes can carry forward. Yes, previous period loss they can, and for the year 26 they cannot, because for the year 26, 25 loss will not be adjusted. Okay, in company B 10,000, tax loss is 10,000. Threshold meet, yes, they are meeting the threshold. Elect for small business relief, no, they are not electing for small business relief. So 2025 meet the threshold, elect for small business relief. No, they are not opting here. They are not here. They are not opting for the small business relief. They can adjust this loss. Here they are opting for small business relief. They cannot adjust this loss. Company C 10,000 threshold. They're not meeting the threshold. They're not opting for the small business relief. Meet the threshold. Elect for small business relief. Yes. So 10,000 meet threshold of revenue of 83 million. No, they're not meeting the threshold. None. Meet the threshold. I elect for small business relief. Yes, cannot utilize the loss of, because they are opting for small business relief, they cannot utilize the loss. Here they are not opting for small business relief, they can utilize the loss. Objective is, I told you very clearly, the period in which you are setting, for that period, if you are opting for a small business relief, in that period, you cannot adjust any loss, any interest of the previous tax period. And for this tax period, if there is any loss or any interest, you cannot carry forward. Simple rule. Previous period, the period in which you have not opted for the small business relief, and the period next period is you are not opting for the small business relief. Yes, you can carry forward the losses, you can adjust the losses, and you can utilize the losses and interest as well. Simple. Another example, ABC resident person corporate tax purposes, 31st December revenue 2 million, but did not elect for small. They have not elected for small business during the tax period. ABC has excess interest at money 400, which is carry forward to be used in the subsequent tax period. They have not elected. They have carry forward. Yes, they can do this. If they have not opted for the small business leave, they can carry forward their interest. In the next year, 25, ABC Limited had revenue of 2 million elected. In the next year, they have elected, then they cannot adjust it. The bottom line is, accordingly, net interest expenditure 400,000 will be carried forward to the next year. Yes, it will be carried forward unless ABC would elect for again small business. Yes, it can be carried forward, but if they're electing for the small business leave, then they cannot adjust it. This 400,000 can be carried forward in any subsequent period, maximum up to period of 10 years, when the business will not opt for the small business relief. By the way, one important thing, interest can be carried forward maximum, interest can be adjusted maximum 30% of the EBITDA. Remaining can be carried forward maximum up to period of 10 years. If the person is in the year 1, in the next 5, 6, 7 years, they are opted for the small business relief, it doesn't mean the period in which they have opted for the small business relief, these will not be considered the time. It will be considered lapse of time, year 2, 3, 4, 5, maximum up to 10 years, including the period in which the person has opted for the small business relief. Maximum up to 10 years, it can be carried forward. It cannot go beyond 10 years if any interest is there, unutilized interest is there. Tax group example, ABC parent company, period revenue 1.3 million, revenue 9 million, revenue 1 million. Okay, they have consolidated. We all know this. Then we need to apply the criteria threshold at the group level instead of the individual entity level. Okay, guys, thank you. Thank you very much. This is over from my side, and we are always happy to listen you. You can call us, you can contact us. Our email is info@crestcooper.com. You can give us a call at 9714-3391-488. Thank you very much. Thank you for being with me today. Let me go through your questions quickly. Okay. First, are free zone entities eligible for small business relief? Yes, but the qualified free zone persons are not. Second, will dividend will be added to calculate the gross income? Yes, dividend will be added to calculate the gross income. It has been very clearly written in the law. Any exempt income, it will not be considered exempt for to calculate the gross revenue. If the company has done sales of 4 million in 2018, but in 2024 he has done only 1 million, so the mandatory eligible, no. Small business relief, another important thing is this small business relief, I always use the word, they have not breached the threshold of 3 million in any tax period. And if the period in which tax was not applicable, that will not be considered tax period. So effectively, starting from 1st June onwards, tax period will be started. And if you have breached the threshold, or if you have a revenue of more than 3 million in any financial year before the effective date of law, that will not be considered the breach of threshold of 3 million. How is revenue determined for a small business purposes? For instance, business or commission fee basis, such as travel agency will have the billings to customer done for the whole transaction value, such as the airfare, hotel accommodation, but the revenue as well. Okay, I understood. This is important. If you are paying any amount on behalf of any other person, that will not be considered your gross revenue. If you are paying in your capacity, then you're taking the money back from them, then it will be considered your gross revenue. Can the free zone person deriving income entirely for non-qualifying opt for small business relief? Qualifying free zone person cannot go and opt for small business relief. And free zone person that is entirely deriving non-qualifying income, that person cannot become a qualified free zone person. Just that person can opt for small business relief. Next question, should the SBR opting to be done every year? Yes, as I mentioned earlier, at the time of submission of return, you need to decide, are you fulfilling the criteria or not? If you are fulfilling the criteria, you an option to opt for the small business relief at the time of the submission of return. One more question, interest can be carried forward for 10 years. Will the year after be reduced for 10? Yes, it will be reduced. I think I have very detailed discussion on this. Virendra Sharma is asking, if you do not opt for small business relief and our revenue is less than 3 million, there would be liable to pay tax. If you are not opting for small business relief, your revenue less than 3 million, you will be liable to pay 0% corporate tax, because you need to map your accounting income to a taxable income. I'm assuming your taxable income will be maximum 3 million. Sorry, 3 million. If you are taxable, sorry, your income is maximum 3 million. Oh, I am confusing with 300,000. Okay, let me reply that. Let me share my feedback again. If your revenue is less than 3 million, you are not opting for small business relief. This is an optional relief given by the government. So you will be liable to calculate your taxable profits. If your taxable profit, whatever the amount is coming up to 375,000 taxable profit, you will be liable to pay 0% corporate tax. And any income beyond 375,000, 9% corporate tax will be applicable. One more question, salaries and expenses paid to working shareholders, partners who managing business will be deductible tax expense. This is still debatable, very difficult to give the questions. I believe they should be allowed at the market value, but this is nothing to do with the small business. Any other question, guys? No? Thank you very much. Thank you for being with me today, and have a lovely evening. Thank you. Bye-bye.